Hello everybody, welcome back to my channel where we talk all things finance and investing. In today's video, I'm going to talk about the ever more popular target date retirement funds. I had somebody comment on a recent video if I could do a video on these, and today's the day. So let's get right into it. Target date retirement funds. All right, so target date retirement funds are getting very, very popular, particularly in the US, and now they're starting to catch on more in the UK. So much so in the US that they're up over $3.5 trillion of assets in target date retirement funds, and they increased in 2024 up by around $156 billion. So this is crazy numbers and clearly catching on with the investor market. So what exactly is a target date retirement fund? And basically with this, again, designed mainly for new investors, people who want a real hands-off approach to their investment. These are funds where you would go and you would pick the year that you wish to retire on. So let's say, for example, you wanted to retire in the year 2040. Well, then you could navigate to the Vanguard website where you could see a list of these target date retirement funds and click on the target date for 2040. And what they will do is Vanguard will then offer an asset allocation, being a mix of stocks or equities as they're known and fixed income like bonds. And they will have a certain percentage in each depending on how far out you're going to your retirement date that you've selected. And what they will do is as you get closer to that year of retirement, they will shift the risk automatically away from stocks and more into bonds. So it will de-risk and you're sort of on an automatic glide path into your retirement. Of course, if you pick a fund with a longer time to the retiree from where you are now, maybe 20 or 30 years, then of course the equity component will be much larger. So it actually starts off at 80% equities and 20% fixed income. But as you get closer, 5-10 years through to the retirement date that you've chosen, the equity component will shift more into fixed income. So it's more conservative, less risk as you approach that all-important retirement year that you've selected. Of course, that makes it easier for you in terms of rebalancing and changing your asset allocation and making sure you don't have too much risk in your portfolio as you approach those retirement years. In the UK, they're typically available in 5-year increments. So if you wanted to retire, for example, in 2042, then you would need to decide whether to pick the 2040 or the 2045 target retirement fund. And the difference mainly in those, again, is going to be the difference in stocks versus bonds in your asset allocation. Okay, so what are some of the advantages or the pros in investing in target retirement funds? The first is obviously the simplicity of doing this. And if you're a new investor, this really could be a great way for you to get started because they're just so simple. All you need to do is pick the year that you wish to retire, and how easy is that? Once you've done so, you go on, you pick on the retirement fund, and then Vanguard will handle everything else. And what they'll do is, in that particular fund that you've chosen, they will invest in index funds across the world in global stocks, heavily diversified, and then they'll do the same for bonds, global bonds and everything quite diversified as well. So if you have a ratio, say, of 70% in stocks and 30% in bonds, then you'll be diversified across those in so many different types of index funds, and you don't have to do anything else. You can buy that one fund and just wait till your retirement comes. And again, as you get closer to that retirement year, Vanguard will handle all of the rebalancing, all of the asset reallocation, so you shift less from stocks, more into bonds for a more conservative portfolio closer to your retirement. You don't have to do anything. This is as simple as it gets when it comes to investing. Another pro in the target retirement funds is their low cost. Because Vanguard tends to invest almost exclusively in index funds, then the fee for these funds is in around 0.24%, which is pretty good if you consider all of the asset allocation and the work done by Vanguard to pick all of these funds on your behalf. Of course, you'd have to add on your platform fee as well. Whatever broker or investment platform that you use, they're going to charge on top of that 0.24%. So just be aware of that and make sure your fees aren't too high because it's very, very important. But 0.24% for the target retirement is not bad. If you invested £10,000, that's only £24 per year. for that fee. So very good stuff. Another advantage of target retirement funds is the diversification aspect. Like I said, there'll be many different types of index funds investing in global stocks and bonds around the world. And within those index funds, there could be hundreds, even thousands of different companies or bonds that are invested into. So you really tick the box for diversification just by buying one single fund by Vanguard. Another pro to this is this automatic glide path rebalancing. And that, of course, is you're gliding into your retirement where the fund manager de-risks your account for you automatically. And that's typically a wise thing to do as you get closer to your chosen retirement date, because, of course, you're not willing to withstand the volatility that comes with stock market investing. So it's very super simple, and the risk is automatically reduced. Okay, so what are some of the cons to this? Well, although they're great in terms of you pick the fund and everything else is done for you, they're not very customizable either. And that could be a bit of an issue. Maybe it doesn't fit your risk profile. Maybe you'd like to be more invested in stocks than the 80%, the maximum amount it allows. Therefore, it may not match your risk tolerance. Another one is there's a fixed date where it starts shifting into bonds, and you may not prefer to do that. You might prefer to hold equities longer than you would do for the target retirement date. Of course, you've always got the option to pick a retirement year that's different than the year that you actually plan to retire. So therefore, you could have more of an equity component if you wish to, rather than shifting more into bonds. So for example, if you were actually planning to retire in 2040, then you could pick a fund that is set for 2045, and those additional 5 years will allow you to have more of an equity component to your portfolio. So that's a way that you can kind of get around this a little bit. The only other con that I've seen when looking at this, for the most part, there's no kind of distributing funds, meaning the income is paid out to you. They're all sort of in an accumulation sort of fund, so therefore you wouldn't get income paid to you. But it doesn't really matter too much, because of course you could sell a little bit of the fund and pull the money out if you need it earlier. Of course, that's all subject to normal rules around accessing your pension, which you can't do until you're 55, and that's going up to 57 pretty soon as well. So who are target date retirement funds really aimed for? Well, the obvious answer is for the newbie investor who just wants the hands-off approach so they can focus on other aspects of their life and not worry about investing their pension or their fund themselves. I think they're a great way to get started. And again, and I've said this many times in this channel, if you're watching this video, you must have an interest in this stuff. Maybe you're just a little bit afraid, you don't have the experience, well then a target date retirement fund could be a great solution for you. Anyone investing in a self-invested personal pension or an ISA, individual savings account, with a long-term investment horizon, these could be a great solution. And of course, people who are not looking to assemble multiple funds, do all the research on the different types of funds and everything, they may be a good solution for that as well. But one thing I would always recommend, whatever you invest in, it's very important, whether you do this on a 6-month or annual basis, it is very important that you always know what your funds and your money are invested in. Get into the details, get into the portfolio data, so you need to know where your funds have ultimately been invested in. Now, if you want to optimize your investment, you want more control of it, then maybe target date retirement funds aren't for you. And you could look at doing your own ETFs on things like the MSCI World, S&P 500, and others. There's literally hundreds, if not thousands, that you could choose from and come up with your own asset allocation of 80, 20, 60, 40, 70, 30, whatever suits your risk tolerance level the best. Now, I personally don't use target date retirement funds, but if I was starting all over, it would be something I would consider. But there are a couple of things that would put me off. And the first one is I would prefer more of an equity allocation than the 80% being the most growth-oriented target date fund that there is. Especially if I was in my 20s, I would prefer to be 100% into equities, and therefore I would not go with these. But if you don't have as much of a risk tolerance and you don't have as much experience, then I think maybe you should look at these instead. Of course, like I mentioned earlier, you need to pay attention to the fees. The 0.24% is quite good actually, but remember, your investment platform is going to add on more. And if you're starting to get up to 0.8, 1%, that's very expensive and maybe better avoided considering the returns that you would get, and actually just a tiny little bit of work yourself you could get much lower fees just by going into ETFs on the main indices around the world. So that's my video on target retirement funds, mainly here in the UK. They're getting super popular. Let me know what you think of the video. Let me know what you think of target retirement funds. And of course, let me know what you do in your portfolio. I love to hear from you guys, and anything that you have to comment on in and around the world of finance, saving, and investing. If you like the video, why not click on that like button, subscribe to my channel if you haven't done so so far. I'd love to have you on board as a viewer. And if you want to see what's in my portfolio and what I do, no problem at all. I did a video on that a few months ago, my one fund portfolio. I'll put a link to that one right up there. So click on that video. I'll see you over there. And as always, I wish you nothing but the best in your savings and investment journey.